Hello and welcome back to Dukascopy TV for another exclusive interview where we ask a top financial expert his views on news and events that could affect the markets. On the line today is Chief Economist of Societe Generale's Asia-Pacific region, Klauss Baader. Klauss, the Reserve Bank of Australia decided to keep its borrowing costs the same this month, thanks largely to a buoyant labour market, among other things. Some analysts are pointing to rate cuts next month, though. Do you think the RBA will start cutting rates again soon?
Yes, I mean, we expect the RBA to make some further adjustments in interest rates. That said, the market has discounted a very aggressive course of action. The market is discounting that by the first quarter of next year, the RBA will have reduced its interest rate by another 100 basis points to 2.5%, and that, in our view, is exaggerated. We expect some further easing, but probably only around 50 basis points. Now, the question about the next meeting is actually a very tricky one. I think the decision is going to be very finely poised, but on balance, we think they probably will move at the August meeting. You see, the August meeting is important in one respect, always is important, because it's one of those quarterly meetings where new projections for the economy are presented, and that tends to then give rise to a broader discussion of monetary policy. The RBA is not special in that. I think other central banks are similar. The other aspect, the other reason why this meeting is important is because, of course, since the July meeting, a lot has happened in international monetary policy. We've had a second interest rate cut from China. Brazil cut interest rate. The ECB cut interest rate. The Bank of England cut interest rates. Even the BOJ increased its asset purchases somewhat. And I think that may, in the end, be combined, of course, with a relatively benign inflation outlook, is probably going to tilt the balance on the RBA towards a further easing. Because what you don't want to happen, if you're on the RBA board, is to give rise to another strong increase in the Australian dollar exchange rate.
The minutes showed today that business tourism manufacturing had been hit hard by a 45% gain in the Aussie dollar against the US dollar since 2009. Well, this has mostly been caused by an expansion in resources, that we know. But looking ahead then, do you see large-scale growth happening in Australia, or are we being overly optimistic about the country's situation?
Well, I think the recent record, of course, has been remarkably strong. The Australian economy surged in the first quarter, and so the full-year growth in 2012 is likely to come in around 3.5%, and that's with relatively subdued expectations for the next 3 quarters. The Australian economy is going to be continued to be driven along by a massive expansion in particular investment in the resource sector. And that is really now focused on liquefied natural gas capacities rather than the iron ore coal mining, although there too there's been significant expansion. The rest of the economy is going to continue to suffer from the relatively high exchange rates. As Australia is suffering from something which became known in the 1970s as the Dutch disease, which is the discovery of resources pushes up the real exchange rate and thereby makes conditions for sectors that are in international competition, manufacturing and retail to some extent, but tourism in particular, come under intense pressure. And that's exactly what's happened in Australia, and it's unlike in the Netherlands. It's likely to persist. So the economy will just have to adjust. Yeah, all that said, the labor market is looking reasonably strong. Private consumption has expanded very strongly recently. It looks as if some of that momentum from Q1 was definitely carried into the second quarter. So I think the nearer term looks pretty good for Australia. But productivity growth in Australia has been relatively subdued, and so I think that growth rates are likely to be closer to 3% than to 3.5%, let alone 4%.
Overall then, the Australian economy seems to be weathering the storm in Europe and other parts of the world affected by financial turmoil quite well compared to other countries, but they do have problems with their property markets at the moment, don't they?
Yeah, the Australian property market is in still a clear contractionary phase. Prices continue to decline, and building activity is depressed, and it's likely to stay depressed for a while because of mostly the price developments. The Australian real estate market is relative to incomes one of the highest valued in the whole world. And the Australian households also hold amongst the highest mortgage debts of any economy in the world. So there's clearly some dynamic of deleveraging going on, and that's going to keep that market relatively depressed for a while. Though, Australia does have a bit of a housing shortage, and in Australia there continues to be immigration. So I don't think that we're going to see a collapse, but the market is certainly in a corrective phase, and so it should, because price rises over the last 10-15 years have been dramatically high.
Thanks very much for joining me, Klauss, and discussing your views on the Australian economy post-RBA meeting minutes. That's all we've got time for at the moment. Stay with us throughout the day, though, for continued updates and analysis here on Dukascopy TV. Until next time, though, goodbye.